Time now for our ETF Spotlight. Bob Pisani joins us here at Post 9, taking a look at company buybacks in the middle of all of the earnings.
And we keep talking about these buybacks, and it turns out there's a number of different ways that you can play them in exchange-traded funds. You know, it's not just a big year for earnings, it's a big year for buybacks in general. There are several buyback ETFs that have had varying degrees of success depending on what's in them. Now, the largest of them is the Spider S&P 500 Buyback ETF. The symbol is SPYB. This has got $16 billion in assets under management. That's pretty big. And it tracks an index that tracks the performance of the 100 S&P 500 stocks with the highest buyback ratios over the past 12 months. Buyback ratios is the amount of cash paid for buying back stocks divided by the market capitalization. So the higher the ratio, the better. It sounds good. It's a great theory, but it almost evenly distributes these 100 stocks. That's a methodological issue, and it trades pretty much in line with the S&P 500. It's up about 5% year to date. 6% is what the S&P is up. Now, another one, and the oldest one, is the Power Shares Buyback Achievers ETF. The symbol is PKW. That's been around since 2007. This tracks an index of companies that have reduced shares outstanding by at least 5% over the past 12 months. This has heavy concentrations in a small group of stocks, including Disney, Citigroup, and Goldman Sachs, but inexplicably not Apple. Now, this also sounds good, but this ETF, perhaps because Apple's not there, has underperformed the S&P, I suspect partly because of that Apple exclusion, and it's only up 1% this year. Here's one that's interesting. Maybe it's better to combine buybacks with other metrics. Trim Tab's all-cap U.S. free cash flow ETF, that's a mouthful, TTAC, tracks an index of companies that have had the largest reduction in shares outstanding, and it combines it with those that have had the strongest growth in free cash flow and the biggest decrease in leverage. The emphasis on companies that are shrinking the float, that's what's important. Big holdings include Illumina, Conoco, and Apple, and that seems to have had some success. It's up about 10% this year, and it's outperforming over the last 2 years. So it's not necessarily you want to find companies that are just necessarily buying back stock or announcing large amounts of buyback. It's how much they're actually reducing the shrink, the float overall, and then combine it with one or two other metrics, and then you get combinations. So this is not an obvious game to play here. Yeah. You just because a company announced a buyback doesn't mean the stock price is going to go up.
Wasn't it Goldman that said most executions are done in August, in the month of August?
It's the largest numbers of executions, that's done in the month of August. I think the important thing here is companies still buy back stock when there are blackout periods, as long as the companies announce a regular period of buying back. So it's not necessarily true that there's this period in these quarters where there's no way for the company to buy back the stock. You can do that as long as the company have announced regular plans to do that. There's a general blackout period for certain executives in these times.
Right.
I want to get your thoughts on the fact that we have all the major averages down more than 1% right now. Folks have mentioned Turkey, but the other thing that seems to really be driving the selling today is the miss in Tencent and the drag lower on Chinese stocks.
Right. So what's the theme here? The theme here is about a little bit about global contagion. That Indonesian rate hike, that's a little shot across the bow around the world. We had that with Argentina earlier. They're trying to be preemptive and get out in front of this saying, we're gonna just take a little bit of insurance out here, make sure everybody knows we're on top of this, little fear of contagion. And this Tencent thing was a big deal. When was the last time a Chinese internet, a tech company, 2% decline in revenues? That's a little shot across the bow about slower global growth, slower China growth generically. So there's sort of two things that are playing out here, and I think those are very potent today at least.
Copper's down, 13-month low.
Yeah, well, again, you get the strong dollar coupled with the slower growth theme. You get copper, you get aluminum down.
Gold today?
Gold down again. There's something else going on with gold here. It's a real problem because the central banks will not tell us whether they're sellers of gold. Some of these smaller central banks out there, I suspect, are sellers of gold. This is widely believed on the street, but we can't, it's very hard to prove it on any short-term basis.
Yeah, 1189. Bob, we'll see you in a bit. Thank you.